You look at this situation, I just wonder why you consider this an area for continued growth.
Hi, good morning. Thanks for having me. I think the cold coffee space, particularly the bottled and canned cold coffee space, absolutely is an area of continued growth. You mentioned obviously Starbucks partnering with Pepsi to bring their Frappuccino products, and that's a growth area that's grown at double digits over the last 5 years. Still a small market with a lot of growth potential going forward, and I think it's hitting that niche, maybe that energy drinks sort of scratch the same sort of itch where consumers want cold, on-the-go, convenient caffeine. And with the increased social stigma of carbonated beverages, I think cold coffee fits that.
Yeah, I mean, Euromonitor International says the market will reach $3.6 billion by 2020, which is a pretty phenomenal amount of revenue to be had. Do you anticipate that there will be some acquisitions, maybe some craft brew type acquisitions in the space?
It's an interesting space because at over $3 billion by 2020, it's still only, by our estimates, a couple percent of the overall beverage market in the U.S. So I still think that it's quite small. There's going to be consolidation. There's going to be a lot of volatility. But what I think ultimately presents the biggest barrier to entry is distribution and retailer relationships. We mentioned Pepsi, obviously, partnering with Starbucks. High Brew, which is a very small company, partnered with Dr. Pepper Snapple recently. And the company's ability, including Coca-Cola, of course, to get into the retailers, get on the shelf space, get into the coolers at the front of the store, that's a very sizable barrier to entry that's costly to replicate. And I think that ultimately will decide the winners and losers in this space.
Adam, maybe regulation will too. You mentioned the social stigma associated with some of the carbonated drinks, not so much there on coffee, but the iced coffee you speak of, that's got a load of sugar in as well. Isn't it just a matter of time that that comes on the radar a little bit more prominently?
Well, and we've got new FDA regulations coming on too that are going to require beverages to report added sugars, which is going to be very interesting to see how that impacts the beverage space. I think that absolutely is a concern. Although lately what we've seen from consumers, they flock to energy drinks, and I think that we could argue there's a lot of sugars in energy drinks as well. And they've moved away from diet sodas in increasing numbers, which of course is a backlash more against the artificial sweeteners. And even high fructose corn syrup has drawn attention as an ingredient of concern. So I think consumers are making choices that are more focused on health and wellness and natural sugars rather than strictly whether or not it has sugar or some sort of sweetener.
You could read this as a bit of a negative, a bad sign for some of these companies that are struggling to find organic revenue growth. Is it a sort of a flailing in the dark for something to sell?
Well, ultimately, we think that for particularly Coke, Pepsi, and Dr. Pepper, which are the big three in the United States beverage market, look, carbonated soft drinks are going to likely continue to dominate their portfolios even over the next 5 years, over the remainder of the decade. Coke and Pepsi are a little bit ahead of Dr. Pepper in exposure to non-carbonated beverages, and we expect growth in these areas, iced coffee being one of them, sports drinks, juices, etc. But ultimately, what happens in the carbonated space, you're absolutely right, is going to really govern the direction of these companies and ultimately their stocks.